Thank you very much, everyone, for being here. I know there's a lot of competition for your time these days. There's also a lot of competition for your money, and we appreciate that you chose to be here with us this morning. My name is Greg Riedman. I am president of your chamber, and really delighted to see all of you here. So thank you again for being part of this. I want to begin just to thank a few people, starting with Eastern Bank, who are the presenting sponsor for this event every year here at the at the Sheraton. Just to clarify, so we do this, and a couple of people asked, we traditionally do this event every spring here at the Needham Sheraton, and then we do the fall one at the Marriott. For those of you who were at the Marriott last fall, sorry, just want you, there will be no rock, paper, scissors today. We have a slightly more serious program, but we think it will be interesting for you, and hope you appreciate it and our presenters. I also, in addition to Eastern Bank, I want to thank Direct Federal Credit Union, InSource Services, Rockland Trust, and the Village Bank as our additional sponsors for this event, and our event supporters, Boylston Properties, and the Bullfinch Group. Please give them all a round of applause. Without the support of our sponsors, we could not do the work that we do, not just these events, but all the programming we do in advocacy throughout the year. We also couldn't do it without our elected officials and our municipal partners. And this is the part where some people always roll their eyes and go, oh, he's going to introduce the electeds again, you know. So there are 4 reasons why we want to make sure that you know who's in the room in terms of our elected officials. And the first one is they like hearing their names. So, you know. The second is they really are our partners, and we really do need to work with them, and we work with them closely. And I think we've accomplished things in all 4 of our municipalities this year because our municipal partners do care about what happens with businesses. Sometimes maybe not as much as we wish, but they really do care, and they're involved in that. Which comes to reason number 3 why we like to introduce them. I'm going to point them out to you so you know who to talk to on the way out about what your business needs are, what your concerns are, what's on your mind. It's really important you do that. But the 4th reason is this is a really hard time to be working in public service and in government. And folks in these jobs have just been battered and hammered in ways that we, can't imagine. And so I want to express my appreciation, not just for the electeds here, but really for the people who work in our city halls, our town halls, state government, and federal government, because really this is just a really challenging time to be in public service. So let's give them a round of applause for that. So over here at our front table, we have Mayor Fuller from Newton, Heidi Frail, who's the chair of the Needham Board of Selectmen, Vince Piccirilli, who is the vice chair of the Watertown City Council, and Colette Frank, who is with the Wellesley, is the chair of the Wellesley Select Board. And then we have a number of their colleagues at another table over here. We've got from Wellesley, actually I think the entire Wellesley Select Board is here. We have Margie Freiman, Kenny Largis, Tom Muffliger, and Beth Sullivan-Woods. And we also are joined by a number of Newton City Councilors, including Council President Mark Laredo, Susan Albright, Martha Bixby, Vicki Danberg, and Steve Farrell. And we're grateful to all of them. And really, like I said, for what people are doing, and we're all going through right now, it's really important that we appreciate that and the people that work for them in particular. Also, we have a number of other town officials, including, I know I saw Katie King, the incoming town manager in Needham, Barney Heath, John Sisson, Steve Magoon, and some other folks. Hopefully I haven't missed anybody, but I appreciate it. Also, you should know and meet our board of directors. Angela Pitter is our board chair. And if I could actually ask all of the members who are directors for the chamber to just stand up so you know who they are, so you can come and tell them, And then, in addition, though, if you're a please stand, stay standing. If you're also a former director with our board, if you could stand too, because we appreciate the former members of our board of directors. So. And finally, but not last, but certainly not least, I want to thank the Chamber team for making this all happen today, and to the folks at the Sheraton for making us feel so welcome and carrying this out. So, We have, I think, an interesting program for you today. We're really trying to respond to the moment that we're in and help you, give you some perspective on where we are. We're going to be hearing from Ashley Stolba, who's the interim Secretary of Economic Development for the state, and we're also pleased that Stolba's former boss, Yvonne Hao, will be joining us this morning, as well as Bob Rivers from Eastern Bank, who you'll be hearing from a little later in the program. But first, we're really happy to welcome back Dr. Mary Burke, who's really, I think of as a friend of the chamber because she's presented for us many times prior to the pandemic. It was always one of our more popular and interesting events when she did that. Dr. Burke, I'm guessing it's not going to be quite as rosy today. Some of the data you're presenting is, but like sort of like you can't blame the weatherman when it rains, but people do. We're going to not try to blame you too much for what you have to tell us. But we're grateful that you're here, and we sure do need to hear what you have to say today. Just a note, we will share the slides afterwards, so you don't need to scribble the things down or take pictures. And also, New TV is recording this, so there will be a recording of the presentation. And time permitting, we'll take a few questions after Dr. Burke's presentation. Dr. Burke.
Thank you for being here. Can everyone hear me well? This is really amazing turnout. Thank you so much. So just to get started, I'll be talking about the Massachusetts economy, the US economy, where we are right now, where we're going. I'll spend about 15 to 20 minutes and then have time for questions. So just a little bit of background about the Boston Fed and the NEPPC, which is the New England Public Policy Center, which is the part of the Boston Fed that I work within in particular. The Boston Fed is part of the Federal Reserve System, including the Board of Governors in Washington, D.C., and 12 regional banks around the country, responsible for conducting monetary policy with a dual mandate for price stability and maximum employment, as well as overseeing financial stability. And the New England Public Policy Center within the Boston Fed, we're a group of researchers who really are focused on the New England economy, conducting rigorous, nonpartisan research to help inform public policy. And we regularly produce research reports and regional briefs. We've produced in the past year items on mobility. There was reduced geographic mobility. One of my colleagues wrote about that. That was really interesting. I had a report that came out in December on labor force participation and what happened in New England relative to the US. So if you're interested, go check out the NEPPC's website after the talk. So just to preview, we're seeing really a stall and even maybe a slowdown in job growth in Massachusetts over the past year. And a lot of uncertainty. Obviously, everyone's talking about uncertainty. Uncertainty alone, aside from what the policies themselves consist of, affects economic activity. I'm sure you all in your businesses are facing this in terms of how do you plan an environment where you're not sure what's going to happen. We see a lot of downside risks for the forecast that especially might affect Massachusetts disproportionately. We hope there are also some upside surprises going to happen, but right now, just the uncertainty itself, as well as some significant downside risks. So this is the picture for payroll jobs in both Massachusetts and the US. And what we do is we index them to what they were in February 2020. And then you can see, so for example, payroll jobs in the US, as of the latest report, which is for March, were about almost 5 percentage points higher than they were in February 2020, whereas in Massachusetts, still not even back to 100%. So we have fewer payroll jobs now than we did in February 2020. And as you can see, that number, that 99.3, is a little bit lower than it was about a year ago. You might have seen somebody give a talk where they said, oh, we've fully recovered our jobs from the pandemic in Massachusetts. Turns out the data have been revised downward. It's a caution that, whenever you see data, they're provisional. They're always subject to revisions. So there was recently some revisions that said that, in the past year, Massachusetts had fewer payroll jobs than we had previously thought. So some sort of downward surprise, and they're just sort of chugging along flat or maybe even declining. So this is sort of an unfortunate fact, you can also see I put in the last number for all the other states in the region. There's only one other state in the region that hasn't yet fully recovered its pre-pandemic jobs level. Part of it is Massachusetts had a roaring economy right before the pandemic, had a really strong job market, so the benchmark itself is a bit of a problem in this calculation, but I think the more relevant fact is that the jobs have just been flat. And then I broke it down by industry. This is not every single super sector. These are just payroll jobs in Massachusetts. The only sector of the largest sectors in the economy that has really seen steady job gains since the pandemic is this education and health services super sector. We know it's the largest employment sector in the New England economy. We know how important healthcare and education jobs are here. Thankfully, they're still supporting the overall jobs picture, but in all of the other industries I've placed here, especially information, they kind of peaked a couple years after the pandemic, and since then jobs in those sectors have been declining. Even professional and business services, which probably many of you in this room are employed, would be classified in that sector, has seen modest job declines in Massachusetts, and we think of this as a really strong sector in the Massachusetts economy. So I see some challenges here. I focused in on professional, scientific, and technical services because it's very strong in Massachusetts. We're very proud of our, biotech and our life sciences industry, but those jobs peaked, in late 2022, and some of the story people will say is, well, they overhired. These firms just went on a hiring spree after the pandemic. This is really just a correction, but a lot of it is also less investment from venture capital firms. High interest rates have a lot to do with this, and many of you know that the life sciences, say commercial real estate, has been struggling with high vacancy rates, just problems filling up those lab spaces. So this is a problem. Friends of mine who are in this sector, if they get laid off, they're having a much harder time finding a new job. It's taking much longer. So that's a challenge. Unemployment rate. We typically expect the unemployment rate to be a bit lower in Massachusetts than in the US. You see for most of the time period it was a bit lower. That's because we have a more educated workforce, which tends to have fewer unemployment spells. Recently, the unemployment rate, it's edged up about a full percentage point in the past year in both the US and Massachusetts, and now it's running about equal. So it's not, I would not call this an elevated unemployment rate. It's still a very healthy unemployment rate, but it's a little bit higher than we might expect for Massachusetts. Really what's going on here, it's not that we've seen a lot of layoffs, it's that more people have moved into the labor force. So that's a good thing. Unemployment going up can be because more people are seeking jobs, and a lot of this is the very large waves of international immigration that have come in the past couple years. So whether that's a plus or a minus depends on your point of view, but that's just one of the major factors behind the numbers, as well as some people who retired in the pandemic, reversing that retirement. There were early retirements. Some people have come back into the labor force from retirement after the pandemic. So there were this sort of temporary retirements. So we're watching the unemployment rate. So now this is the picture for migration. We break migration in and out of Massachusetts into two different components. One is this domestic piece, so people who live in Massachusetts moving to another state and vice versa. And then the international component is people coming from other countries into Massachusetts, or people leaving Massachusetts for other countries. And so you can see that that blue line is mostly negative, and it's been below, minus 15,000 people since 2015. And so this is people choosing to leave Massachusetts for other states. I'm sure everybody in the room has a friend who has left. A lot of people are just going to New Hampshire to get cheaper housing, and they're still working in the state, but some people are going to Florida, Texas, et cetera. We know cost of living is a big factor in this. Notice this happened before the increase in the marginal tax rate for people earning more than $1 million. Some people say that's playing somewhat of a role. We're not seeing a big factor there, but it could be a factor for some people. The offset to this is the international migration piece. If we didn't have this international migration, the red line, then the population of Massachusetts would probably be declining. There's also births and deaths going on that affect the population. They're not having a big effect on net. But really, you can see the surge in international immigration into the state, which, as I said, is supporting the size of the labor force, but it also creates other challenges for the state in terms of pressure on resources, et cetera. So this is really, a pretty dramatic picture that tells you that domestically we're losing people, internationally we're gaining people. So now let's turn to inflation. Obviously, inflation has been a lot on people's minds since the pandemic, when we had this very large inflation, and the Fed has took a lot of measures to raise interest rates to bring down inflation, and there has been significant moderation in inflation. I've got 3 series here. I've got the US, I've got New England, and I've got Boston. So we do have inflation measures for Boston itself, Boston Metro, as well as New England-wide. Boston doesn't have numbers for April yet. They're just come out with a lag. So I put in the New England numbers so you could see the April inflation reading, which just came out yesterday. Okay, so these numbers are quite fresh. So the pretty good news is that for the US, the headline inflation number came in at 2.3%, which was a little bit less than economists' expectations of like 2.4. People are saying it's sort of too soon to say, oh, tariffs aren't having an effect because the tariffs they're not really feeding into these numbers yet. So this might be sort of the calm before the storm. But you do see what's kind of more of a concern here is that for the New England number, it's been running above the US inflation rate. So in New England, we're facing sort of above average inflation. Now, the March number for Boston did fall back to the US, so that's encouraging. That means maybe the New England number will start to moderate. So let me tell you what's been behind the higher inflation, because inflation in the region doesn't always run higher than it does in the US. You see for periods during the pandemic, it was actually, we had slightly more moderate inflation. They tend to track in terms of trends. But we can look at the components of inflation, and this is just the past 12 months, the percent change in each of these separate components of inflation, and you can see the big differences between New England. This is now the New England numbers, because these are through April. The big differences are in the shelter component, so this is owner-implied rent, as well as if you rent a house, it's basically what it costs to own or to pay for your residence. The shelter price has been going up much faster in the region than in the US. Partly that's we have housing supply problems. I'm sure you've heard about this. So the shelter inflation rate has really been driving higher inflation in the region for some time. Now, this has moderated, but it's still elevated relative to the US. We've also been facing faster medical care, so like insurance, health insurance, medical care costs have been rising faster in the region relative to the US, and also our education and communication, but mostly this is education. I think private school tuitions have been going up, college tuitions have been going up more rapidly here. We tend to have very expensive schools in the region. So those components have been putting upward pressure in the region. They did come down, so in Boston in the March readings, those components, they were still elevated relative to the US, but they've been moderating. So maybe, sometimes these are just volatile. They might be moderating, we hope. But that's right now what's causing that above average inflation. I'm sure all of you have sort of felt this in certain ways. Now we're going to look at consumer confidence, because this can be a leading indicator of where spending is going to be going. It can be predictive of consumer spending. It's not always predictive of consumer spending. Consumers have been in a dour mood for some time, and yet retail spending numbers have been pretty good. So there's been a little bit of a disconnect, but still this is just important to look at. So we've got for both the US and New England, both the overall confidence, it's down a bit from a year earlier. It's not down dramatically. And then we break that into 2 different components. One is how do you feel about the present situation, and then how do you feel looking ahead to the next 6 months? How's your confidence in the next 6 months? And interestingly, people in New England feel a little bit better about the present situation now than they did a year ago, for whatever reason. As well, however, if you think about the future component, that's down in both New England and the US. And if you look at the past several months, I thought it was interesting to break this out. So this is just the future expectations component, and I showed it since November. For both New England and the US, look at that, it's really tanked since November. And so, the best understanding of this is that there's just so much uncertainty about the direction of the economy that the outlook for the future feels negative. It feels scary. We don't know what's going to happen with tariffs. Is that going to cause inflation? Is it going to hurt economic growth? So the uncertainty itself is a problem, but also it seems that the direction of policies is leading people to be more pessimistic about where the economy is going, whether in terms of it's going to cause higher inflation or slower economic growth. So these things can turn around a lot. They tend to be quite volatile. Even a trend for a few months could easily reverse itself. We hope this, as uncertainty gets resolved, this could improve a lot, because, something like, oh, tariffs on China at 140% versus, oh no, that's only going to be half of that, suddenly people can feel a lot better. We know the stock market has been swinging a lot. I think it just moved back into a positive territory, so hopefully, everybody just held firm on their portfolios, but it clearly has been a wild ride in terms of where people see the economy going. So now I'm going to turn to the FOMC. So this is the Federal Open Market Committee. These are the voting members as well as additional regional bank presidents. It tells you about their outlook for several indicators for the economy. This is for the national economy, and 4 times a year. Now, they meet 8 times a year, but 4 times a year they put out these projections. Okay, and these are the median projections of the people attending the March meeting. They'll have another set of projections in June. The May meeting, they did not update the projections. And so you see they've got, the unemployment rate, they're expecting to be drifting down. Each of these points is where the median projection for the end of that calendar year. So the 2025 number is what they think is going to happen as of December 2025. So, they see unemployment drifting down, not going up. Fed funds rate slowly drifting down. So they're still thinking about normalizing the Fed funds rate. PCE inflation, that's the Fed's preferred measure, drifting down to 2%. GDP growth actually rising, and that's consistent with interest rates falling. So this is sort of the proverbial soft landing. So what's baked into that Fed funds rate number? The median participant thinks that there could be 2 rate cuts by the end of the year. However, there's significant disagreement on that. If you look at this famous dot plot, something like 8 out of 17 people who made a projection in March thought that there would only be either 0 rate cuts or only 1 rate cut, whereas the other 11 said, yeah, there's going to be, like 9 people said 2 rate cuts and 2 more people said 3 rate cuts. So there's really some sharp disagreement. Sometimes there's very strong agreement. So we could have 0 rate cuts this year. We could have 3 or 4 rate cuts by the end of the year. Okay, the best guess right now is 2 rate cuts. Now, this is highly contingent on what happens, what they see the balance of risk. And noteworthy is that these projections in March involved a downgrade in the expectations for GDP growth relative to the December projections and an upgrade in the inflation expectations relative to the December projection. So on both scores, sort of the projections got worse, moved in the wrong direction relative to what the Fed was expecting as of December. So this creates obviously a significant challenge if you're trying to control both inflation and unemployment. So now I'll show you what's been happening to GDP growth in the US and Massachusetts. The solid bars are all, actual numbers from the Bureau of Economic Analysis, and then the shaded bars are projections. We do have the Q1 GDP growth for the US. As you know, it came in at minus 0.3%. There was a bit of a technicality. It had to do with people shuffling their consumption towards imports to try to head off tariffs, get those goods in before the tariffs went on. That might reverse. So it doesn't mean we're necessarily going into a recession, and most people don't think that. Instead, the forecast calls for pretty moderate GDP growth in either the US or Massachusetts for the remainder of the year. But there are risks, these are very uncertain. There's a lot of uncertainty around these. And, all of the people from, like, say, Goldman Sachs, JP Morgan, they all upgraded their probability of a recession for 2025. It had been sort of 25 to 40%. Now they're putting it 50, 60. Some people see 70% chance of recession in 2025. But again, highlighting the fact that there's a lot of uncertainty around those projections. So, the outlook calls for modest growth. The median, the expectation is not, some drastic recession, but, much slower growth than we saw in 2023 and 2024. So just to talk a little bit more about the outlook and really what's weighing on it is, again, this policy uncertainty. Uncertainty itself is weighing on the economy. It affects capital spending. Firms don't want to make big decisions. They don't want to make big hiring decisions. This is part of why we see hiring slowing down. And it really complicates the job for the Fed. So if you expect inflation, if you think inflation is going to be higher than you thought, you'd want to keep rates higher, because you really don't want to risk sparking inflation again. And consumer inflation expectations have been kicking up, even though the business inflation expectations have not. So they really want to anchor those inflation expectations. But if you think growth is going to be slower than you're expecting, then you might want to lower interest rates to stimulate the economy. So you can't do both at the same time. You can't head off inflation and stimulate the economy, because that calls for rates going in opposite directions. So this is why I don't want to be Jerome Powell at this moment. So, this is really the challenge faced by the Fed. Some people think the risks to the inflation on the upside are the more important risk, and so would call for let's hold off on rates. Other people see the risks of slowing growth as the more important risk. The words that they have been using have been, we can afford to be patient. So Powell at his latest press conference emphasized that the risks to higher inflation and the risks to slower growth have increased, and they're watching those, and they're watching the data very carefully to see which risk turns out to be the greater danger, and they feel they can afford to be patient. Therefore, it seems as if, a rate cut in June is not imminent, okay? That's, don't put money on that, but that's my best guess. Oh, by the way, I forgot to say, the views are my own. These are not the official views of the Federal Reserve Bank of Boston or the Federal Reserve System. Okay. So, in Massachusetts, however, we have our own particular risks, such as the aging population and domestic outmigration, which puts a drag on, the people who can work in the labor force, which affects economic growth. So, we've had kind of tepid, we've been doing pretty well relative to our size, but we really continue to rely on labor force growth to support economic growth. And federal policies really pose, I would say, a disproportionate risk in the region. The trade war is already affecting economic activity in Massachusetts. There's been way fewer Canadian tourists coming in. They're canceling their summer bookings on Cape Cod. We rely a lot on tourism, especially from Canada, and it's already fallen off just from the bad relations spurred by the trade war. Even if those tariffs wind up being taken off, some people say some of the damage has already been done. We hope that this can, go away, but at least for now, it's already affecting tourism activity. That's just one example. There was a study from 2 economists at Boston University. I take no responsibility for this study. It's just interesting because they did some very careful projections about how certain federal policies might negatively affect the Massachusetts economy, such as tariffs could lead to, lost economic activity, and tax revenues could fall by up to $1 billion. All these are pertaining to 2026. Obviously, there's a lot of uncertainty. Just to give some ballpark figures, the stakes are potentially very high. Again, it depends on where tariffs end up. The cuts to the NIH grants, many of you are familiar, these are a very important factor and engine of local economic growth in Massachusetts, could again drain economic activity in the Massachusetts economy by over $2 billion and some tens of thousands of jobs potentially. And already it's affecting hiring. Already universities are cutting budgets and freezing hiring because they know they're going to get less grant money. This is really already having an effect. This is not a fiction. Immigration crackdown could also affect the labor supply and put upward pressure on wages in the region. So that's sort of an upside risk from inflation. Now, maybe there's going to be some positive surprises. Maybe the budget that's going to get passed could involve some tax cuts that can stimulate the economy. In the first Trump administration, there was some tariffs, not as big as what's being proposed now, but there were also tax cuts and deregulation and other aspects that were stimulating the economy. The economy did quite well. So I'm kind of hoping that it's not all doom and gloom, and maybe we'll have some positive surprises at the end of the day. So I just want to turn your attention for 2 minutes. I have a little bit of a plug for something from the Boston Fed. We produce the Beige Book 8 times a year, and this is something that is a public document that all of you might read. It's anecdotal information, qualitative data about what's happening in businesses, and we collect information from businesses headquartered in the region. People on the FOMC actually use this. Jerome Powell talks about the Beige Book in his remarks often. And what's exciting right now is we're expanding our sample. So we're looking for more contributors. We're going to be doing online surveys. It used to be, a 30-minute phone call. Now we're going to switch mainly to surveys. And so it's going to take less time. You can do the survey on your phone. And we're just trying to recruit a lot of businesses because we really want to understand better what's happening in the New England economy, and this does inform monetary policy. There's no payment for your services, but you have the satisfaction of knowing that your voice is heard, and Susan Collins of the Boston Fed will read this report, and Jerome Powell will read the report. You're never identified, no business is individually identified in these reports. If you're interested, you can scan that code. I don't know if that works. I will be sharing the slides, and so when you get the slides, you can scan that. If the scan doesn't work, you can send an email to my colleague, obviously not email me. Just kidding. Anyway, thank you so much for listening, and I welcome your questions.
Hello, can you hear me?
Yeah.
Just what's stimulating the growth for international population in Massachusetts compared to domestic decline?
Well, immigrants from other countries perceive that the opportunities in the U.S. are much better than they are relative to their home country. So, and a lot of them come here because there's already an immigrant network. So we already have a large population, say, from Haiti and the Dominican Republic. So if you're thinking of immigrating from Haiti or the Dominican Republic, you're going to go where maybe your relatives or friends are. So it's sort of a historical process, but it's also, there are a relatively large amount of jobs. There's strong economic opportunities here. Domestically, once you're already at a certain point, you're looking at a higher housing market, young families having a hard time affording a house. Now, it's not the immigrants aren't also having a hard time affording things here, but they might be looking at a different, maybe they're more single people coming in, looking at the rental market. So there's just different dynamics, but that's a really interesting point that you make. I think it's the opportunities relative to your current situation.
Thanks, Dr. Burke. Quick question on employment. Post-pandemic, at our bank, and this is anecdotal, this is not official, we struggled with filling jobs. In other words, not enough recruits, people not showing up for interviews, people getting the job and not showing up on day one, people showing up on day one and leaving after orientation. Any observations on that dynamic? I think it was unfairly pinned, maybe fairly or unfairly pinned, on the younger population. But any thoughts on that and how that plays into your numbers?
I think a lot of that was people didn't want to go back to an office after the pandemic. They got used to staying home. People were willing to accept remote jobs, but in-person jobs were much harder to fill. That has alleviated quite a bit as the economy has normalized coming out of the pandemic. However, I do think there are still challenges filling certain jobs. I know leisure and hospitality has still been struggling to fill jobs. There can be mismatches, and yet at the same time overall, sort of the ratio of vacancies to unemployed people has normalized because there's just a lot fewer vacancies. So it used to be everybody was needing to hire and there weren't enough people. Now fewer people are hiring. So a lot of it is just the market has equilibrated because there's just less hiring. But as you see, not all the jobs have been replaced. So some of those jobs just didn't come back. Those hiring difficulties were very real. Most people we talk to say that over time hiring has become easier, but not everywhere. So the composition of jobs has changed. So some jobs have not been replaced and then other new jobs have been created. Overall, I'd say we've shifted more in the direction of more education and healthcare jobs, fewer manufacturing jobs, fewer leisure jobs, and fewer professional business services, which would speak to the banking piece.
Do you see any bright spots or bright industries for the Commonwealth?
Well, as I said, our education and healthcare sectors continue to see a lot of growth and job growth. There is consolidation going on. I am worried now a bit about the higher education sector, given some institutions being targeted. I would say the bright spots are there's still business formation going on, and out of the pandemic, there were a lot of people starting small businesses, and you see that there's still a lot of lending going on to small businesses. So I think that we have the possibility of growing our small businesses to become, people who will employ more people as they grow. So there needs to be a lot of nurturing of these growing businesses that have started up since the pandemic.
Thank you so much for your presentation. And speaking for those of us who may not be in the thick of business, it was nice to hear language that one could comprehend. But I have a question which I haven't read or heard much discussion of. What do you think the impact of all the cuts to the federal government are for the country and for Massachusetts specifically?
Yeah, that's an excellent question. There were so many risks, I didn't have time to talk about all of them. Certainly cuts to federal jobs. Some federal jobs are located in Massachusetts and New England. So that's going to weigh on our unemployment. We're looking for signs of fresh layoffs. There has been some increases in layoffs in certain parts of the region. So the federal jobs are what we expect. They certainly hadn't been growing. We expect that to be weighing on employment growth for sure. And then there's also spillovers. If, a federal job tends to be a pretty well-paying job, somebody might get a new job, it might not pay as much, they're not injecting as much money into the economy, that can have ripple effects. In the long run, what can happen is if people talk about waste, there's certainly some waste, but if you cut back too much, you might be cutting into essential services. And there could be like these long-term research projects that private sector would not fund these long-term basic research because they don't get a profit off of it, even though the economy as a whole can benefit when we have basic science that eventually produces innovations that can really improve productivity. And so if you have less research funding and fewer government agencies promoting this kind of research, then you really can have, it's not going to show up in the short run, but in the long run, you just have fewer breakthroughs that can really benefit all businesses in terms of innovation. It's hard to measure that, but economists have shown that government spending on basic science does have a big impact on the economy. So that's great that you pointed that out. Thank you. One more question? Yeah.
Along those lines, in terms of employment, the nonprofit sector in Massachusetts is a huge employer, and I'm wondering if you have any data or any observations on just the lack of federal funding. We're hearing a lot of nonprofits are closing. How do you expect that will affect employment in the state?
We don't have hard data on that because we can't, it's not easy to separate out the nonprofit sector as a sector because it cuts across all those different sectors. It's located in education, it's located in health services mainly. We do meet quarterly with contacts in the nonprofit sector, and I attended a meeting recently, and yes, people had grave concerns about what was going to happen with funding, even such things as, food banks facing cutbacks in funding, and as families are needing to rely more on food banks, there's not going to be the support. So the best hope is that, you can rely more, hopefully, on more private donations to make up for it, but if people are feeling antsy or anxious about the economy, they're less likely to open their pocketbook. So I think that is yet another risk factor for quality of life, and yes, it could hurt employment for sure if there's fewer funds for those organizations. So I hate to end on a dour note, but thank you all so much.
Yeah, that was cheerful. Thank you, Dr. Burke. I really, truly appreciate it and the insights there. Very grateful. I wanted to mention Bob Rivers, who we'll be hearing from in a few minutes, is the president of the Federal Reserve's 12-member advisory council. Is that the same group you were talking about a minute ago, Dr. Burke? The advisory council? Well, either way. And a representative of the Fed's first district in encompassing Greater Boston. All right, so we're going to move from there on to our other, I'm just really excited about the next three speakers that we have for you, all extraordinary people that I've gotten to know over the last couple years who really mean a lot to, I think, our community. I did want to mention that the QR code that Dr. Burke showed, it's really important that we all engage in that. One of the missions for our chamber is to make sure that our inner suburbs are heard in the media and in economic forecasts and everything. So I do hope that many of you will engage in reporting and participating in the Fed survey. Now, Yvonne Hao is in the house. Secretary Hao, we're so delighted to have you. She didn't need to be here because she doesn't work for the state anymore. She, and she was scheduled. We had arranged to have the secretary here earlier this year, and when her job situation changed, and she needed to, and maybe you'll talk about that a little bit. She called him and said, "I still want him. I'm still coming, whether you put me on stage or not." And I said, "Well, if you're coming, we're putting you on stage." So we'll be hearing from Secretary Hao. I've had the honor to collaborate with her multiple times, including we took a trip together with other business leaders to Raleigh, North Carolina. We visited a number of companies, including via Separations, Shark, Ninja, and their biggest fans, the folks, our friends at Big Belly, among others, and I had a chance to see her. And this is a woman who makes lemonade out of very, very sour lemons. It really is. She's been an energizing force, an advocate for all of us, and a source of those Team Massachusetts bands that you maybe see around. And we're just so grateful to have you here. And we're equally grateful to have Ashley Stolba, who I've had a chance to hang out with a number of times too. Her focus as undersecretary before taking the interim job now was on regional and small business growth, infrastructure, tourism, international trade, all stuff that really matters a lot to our communities. So we're glad to have that and have you with us and look forward to hearing from you. But first, Bob Rivers, who I consider to be a friend and a mentor and someone who's really kind of helped me think about things over the, in our chamber, think about things in the last few years. Bob encouraged me and our chamber to really take a lead in fighting for housing, not just in our own communities, but around the state. And we've partnered together. We're co-chairs with a few other people on the Massachusetts Home for Thriving Commonwealth campaign, which is something that really is about encouraging and engaging people in this fight to create more housing. But he's also been a courageous leader in advocating for diversity, equity, inclusion, early childhood education, workforce development, and many other areas. Now, his employees are sitting right here, so they'll probably clap the loudest. But please, everybody, welcome Bob Rivers. Thank you.
Well, good morning, everyone. It's great to be back here with you at this breakfast again this year. And Greg, thanks for the kind introduction, and right back at you. As I've observed to many people, I really discovered Greg. I knew Greg, but I really discovered Greg during the pandemic when he started, at least on my email distribution list, his regular emails that come out that I'm sure you'll all agree are incredibly not only informative, but really insightful, not just about the region that the Charles River Chamber covers, but all of Massachusetts and beyond. And I've really learned so much from that. So Greg, thank you so much for... And as Greg mentioned, we've worked together on some housing issues here in the state, but certainly here locally. About a year or so ago, I had the opportunity to work with Greg on driving forward the MBTA Communities Act plan, specifically here in Needham, which, again, thanks to the leadership of really all the electeds in Needham, but in particular, the Needham Select Board Chair, Heidi Frail, drove forward a plan where now Needham is in compliance, making it one of 129 communities who have done so, which now includes all 4 of the Charles River Chamber communities. So thank you so much for that. So I've got to know Dr. Burke a little bit through my stints when I show up every quarter at the Federal Reserve Board in Boston's meeting on a quarterly basis to report out on the Federal Advisory Council. And as I was listening to your presentation, Dr. Burke, I was called to mind for me, there's an old Chinese saying, actually it's a curse, that may you live in interesting times. But as JFK once observed, the Chinese symbol for crisis is actually comprised of 2 brushstrokes. The first represents danger, and the other represents opportunity. And I think that's what we have here right now. Despite all that's going on, and I submitted earlier this week my report on behalf of the New England District with respect to a number of questions were asked in the Federal Advisory Council, one of them, of course, being the economy and what's going on. And as Dr. Burke observed, the trends here locally are very consistent with what we're seeing nationally, not only in the data, but what people are feeling nationally as well. So we're certainly not alone. I think sometimes we feel, as we look at perhaps the electoral map and see the spot of blue that we have up here in the Northeast, that we're really under the scope of this administration. Nonetheless, everyone is feeling it. And we're feeling it for a number of reasons. Certainly what I think about is the economy before the new administration came in was already suffering from what I call long COVID. And when you think about the structural changes that happened during COVID, that era, it really ended that era of interest rates at almost 0 levels for 10 to 15 years. And the Fed's need to address accelerating inflation by rising interest rates and really returning interest rates, which today are historically normal, actually. They feel higher because they're higher than they were for a decade and a half, but they're actually pretty normal. But nonetheless, the economy settled into those, and there have been massive structural changes. One, of course, is housing. 75% of the mortgages in the United States today are 4% or less. So as a result, a lot of the housing supply is locked up because people aren't moving. They won't want to give up that mortgage. They're going to reinvest in their house. So that's been a big weight on the economy. You see it in healthcare, in terms of the pressures on healthcare and the fact that reimbursement rates haven't kept up. And there's labor shortages. That's disrupted healthcare. Although all the news focuses on places like Harvard and Columbia in terms of higher ed being under the scope of this administration, it had actually already happened earlier. Because when you look at the small private higher ed institutions, they are suffering as well. From lack of enrollment, as people's preferences changes, minimum wages went up, and people started to think differently about the value of higher education. Office real estate. My office is downtown in the financial district, ground zero here in Massachusetts for the office real estate crisis. Again, a function of the changes made by COVID, by people not returning to the office as frequently as they used to do. And that not only has a trickle-down effect on the value of the office real estate, and increasingly over time on municipal budgets, but also it has an impact on the downtown businesses as well that have suffered from lower traffic. So even before the presidential administration changed, we were already suffering through these structural challenges. And of course, in this time of great uncertainty and at times chaos, you might say, they've only been compounded. Nonetheless, I do think this is an opportunity here in so many ways. I know myself, as I came off the inauguration speech back in January, I think many of us probably felt, as I did, the shock and awe of what was being rolled out. And it took me about a month to sort of calibrate, like, where the heck am I here on a number of things, and how do we deal with this? But once you come through sort of that fog and really come out of our respective holes, what you're going to find is there's a lot of opportunities. And one of them I want to call out is the nonprofit sector. Our nonprofit sector is not only a big sector of this economy, but is important to all of us in terms of the quality of life and those of our neighbors in our communities. And the Eastern Bank Foundation, as you may know, is one of the larger private foundations around, $250 million in assets. And like many foundations, and many of you who give charitably, you're seeing the shift right now. Before this administration, we were very much focused on investment, transformation. How do we do more? How do we do it better? But what we're finding today is we've got to shift a little bit. Now we're back at what I call sustainability and survival. We've got to focus on our nonprofits, our key nonprofits, and helping them get to the other side of this chasm, no matter how long it is. And we can all play a role in that, not only in terms of funding and financially, but leaning into volunteerism. They need our help. We all can do that. And I would really ask you to really engage with our local nonprofit sector to see where we can help, because as they face federal cuts, which are happening already, they are feeling in some cases very much alone today. And I would really encourage us to put our arms around them. Greg talked about Secretary Hao, and as I think about these times, and I've quoted this line often from Don McLean's American Pie. You remember the line that goes, "I met a girl who sang the blues and asked her for some happy news, but she just smiled and turned away." That's not Yvonne Hao. She never sang the blues, and she certainly never turned away, and she jumped right in at a time of challenge and opportunity here in the Commonwealth. I speak for so many of us who are truly mourning her departure from this role throughout the business community. There's been no one better. And bringing together that perspective of business and that ability to bring people together across multiple sectors was extraordinary. Yvonne, you were everywhere. You're even here now when you're not even in the job. And so much has been accomplished during your 2 years in the administration. You know, you were a big part of the housing bill and the $5 billion Affordable Homes Act that really drove and has given us the resources, yet again, another opportunity to build more housing here in the Commonwealth and here in our communities. We need it. People complain about affordability and they talk about construction costs and labor and higher interest rates. All those things are true. But the biggest factor is lack of supply. Until we get more supply, we're not going to correct this. And again, the Affordable Homes Act was a key part of that. And then again, Secretary Howe's signature achievement was the $3 billion Mass Leads Act, looking to the future. You know, we've built a reputation over pretty recent years in the biosciences through tremendous investments from the Commonwealth. We're now a national and worldwide leader in this area. And it was Secretary Howe's vision to think ahead and say, what are the next things in which Massachusetts can lead? Climate tech, AI, a number of emerging industries that, given this incredible intellectual capital we have here in Massachusetts, we can leverage and drive forward. So again, Yvonne, I can't thank you enough for everything that you've done. It's been really remarkable. And I plan to see you often, but we're going to miss you none the same. So. I also wanted to pick up on Greg's comments about public service. I think many of us sometimes take for granted those of us who are in public service in elected office. But I think one of the things for me that just knowing Yvonne and thinking about the transition he made really underscored the sacrifice that everyone in public service makes. Think about this, so Yvonne, former Secretary Hao, has been a CEO, a senior business leader, served on numbers of boards, very, very successful. And when the governor reached out and asked her to take this position, think about the trade. Come and take a job that's going to pay you less than $200,000 a year, that's going to require you to work as many or more hours than you did before and keep you away from your family even more than you were before. Secretary Hao is not alone in that. When you look at all of our public service officials and the sacrifices they make for us, one of the things I say often is, and there was a local community down in the South Shore that complained about their mayor salary being doubled. My cousin lives in Quincy, griped about it all the time, and I said, why? These folks are leading major organizations and should be paid like private sector CEOs. Because if we don't do that, it's going to be hard to get the talent like Secretary Hao. That's just a fact. So again, I underscore that because all of our public servants are very talented people, starting with our governor, and our lieutenant governor, and with Ashley Stolba. Ashley has been in this administration and the one before it now for over 4 years, and in some form or fashion of public service her entire career. Someone who is very bright, highly educated, has all the skills to lead a major corporation. But instead, she has sacrificed for us to take this position and lead. And so without further ado, I welcome you, Ashley, and Secretary Hao to come to the podium.
Okay, good morning. I'll kick things off just quickly. So my name is Ashley Stolba. It's very nice to see you. I think I'm on week 3 of being interim Secretary of Economic Development. So being sandwiched between Bob and Yvonne is quite the daunting task. So I'm going to be brief, but I wanted to say thank you. So really thank you to Greg. I know, Bob, you mentioned this. We all get a lot of emails and a lot of news emails. Greg, you do such a good job keeping them concise and interesting and innovative, and I actually read them, all the ones that you send. So thank you so much. And also thank you so much for advocating for your companies. Some of the best businesses that we've been to were right in this region. So I know you already gave a shout out to the awesome Big Belly team, but I had no idea that these, I'm not calling them trash, the waste management receptacles with solar powered on the top. I'm not allowed to use trash, but right here I need them. So we're really grateful for all the work that you do. And I also just want to say thank you to all of you. So you heard Dr. Burke's presentation. I know you're living this every day. This month is National Small Business Month. We're hearing small businesses all across the state. A couple weeks ago, the governor convened a lot of trade organizations and large businesses to hear about how the tariffs are impacting all of our businesses. A few weeks before that, we convened hospitals to talk about NIH funding. And just earlier this week, I was in DC hearing from states what's on their mind. And I'll tell you, we're hearing consistent messaging throughout. It is a very chaotic time. It is very unpredictable, and it is not easy to do business here in Massachusetts or even in the United States. So I really just want to say thank you. One thing I will just mention is that we are very lucky to live here in Massachusetts. We have the best public schools, especially here in this region. We were voted the best place to raise a family, the best place to be a mom. We have the cleanest drinking water, which feels maybe slightly random, but it's actually very important that we have all these great things here in Massachusetts. And I'll also say that we're just a very, very well-governed state. So I know, Bob, you mentioned all the work that we did with the economic development planning process and our economic development bill that we filed and passed, working very closely with the legislature. But these investments that we're making here in Massachusetts are huge. $4 billion over the next 10 years, including investments in life sciences, in climate tech, in manufacturing, small businesses, big businesses. We're very lucky to be here in Massachusetts. And one of the things that we're also doing is making things very easy for businesses. We know dealing with the state is not always the easiest. We have a lot of grant programs, especially now after the Mass Leads Act was signed. We want to be sure that we're making these programs easy for you to access. So one thing that we're doing is called the Business Front Door. This is going to be a very easy to use website that businesses can go to, say your name, say how many employees you have, what you're trying to do. If another state is trying to lure you in, go to this website. We're going to have someone on the back end really be a concierge service to you and help you navigate all of our state programs. So those are a few of the highlights of the things that we're doing. But I'm very excited to introduce my friend and former Secretary Yvonne Hao, who I know has lots of points of views on Dr. Burke's presentation. So I'll let you go into that. I won't stay away from that. And I think we'll open up to questions.
Yes,
so
great.
thank you.
Stay here. Stay
Okay,
here.
I will not
All
move.
right, I
Okay.
don't know how to turn this on.
Okay, you can also use this thing.
Okay, yeah, great.
Okay.
All right, well, thank you so much. I am so grateful, Greg, and I committed to doing this because I would do anything that Greg asked me to do. He is an incredible leader in our state, and we are so lucky in our state for many reasons, but most of all because we have incredible leaders like Greg and also like Bob Rivers. Bob failed to mention that he and I didn't know each other. Even though I had a long career in business, he and I did not know each other except for on a March weekend, Silicon Valley Bank almost collapsed. And on that weekend, everyone said, you have to call Bob Rivers. And so we became very fast friends all Saturday, all Sunday, trying to avert a financial crisis for our state. So, and since then, you've been an incredible friend and such an inspiring leader in so many ways. And thank you, Ashley, who, we do have awesome people in state government here, and I think Ashley is the perfect example of that. So Secretary Stolba, I'm so thrilled that you are now taking the helm. And I'm so excited to be here with all of you. It is a very bittersweet moment for me. So as Bob mentioned, I had a long career in business, never thought I'd be in state government. And I was sitting at home in December of 2022, and my cell phone rang, and I picked it up. It was a number I didn't recognize. I assumed it must be kids' school, I'm missing some form, doctor's office, I'm like late for an appointment or something. And it turned out to be Maura Healey. And she's like, hi, this is Maura Healey. And I literally was like, is this like a robo-dial? They're gonna ask me for money next? Like, it's a prank call. So I said, hello? And she said, yeah, is this Yvonne Hao? This is Maura Healey. I just got elected governor. And I was like, wait, this is definitely not a prank call. And so I said, yeah, I know, I voted for you. But I'm embarrassed to admit this, but I had never been that involved in politics. I hadn't contributed to her campaign. I wasn't involved in her campaign. I had met her once briefly. So she said, yeah, I'm putting together my cabinet, and I really want someone who has a business background, and your name has come up. Would you meet with us? I had lunch with her the next day, I think it was like December 20th or something. And then on New Year's Day, she called me and said, we'd love to offer you this job to be Secretary of Economic Development. And she said, I only want you to, I only have 24 hours for you to decide, because I want to announce it before my inauguration. So if you say no, I need to ask someone else. So I had 24 hours to decide, and the reason why I took this job is very simple. So I talked to my husband and our kids, and as Bob mentioned, so I was on 4 public boards and 5 private boards and advising 2 investment firms. Each of those things I was doing makes more money than my current job, or my job I just had. So it was definitely not for the money, and also I have no political ambitions at all. I would like to be happy. My happiest place is in my sweatpants walking my dog in the neighborhood, totally anonymous. So it's not for political reasons. The reason I decided to do this job is because I am the first person in my family to be born in this country. And I am the product of the American dream. The fact that I'm standing here and that I've had these incredible opportunities, that we've had this incredible life, that we've been able to raise our kids and do all these amazing things is because of this country. I am so deeply indebted and so proud to be American. And I thought, and by the way, I'm proud to be in Massachusetts. We've had amazing careers that are meaningful, that have incredible colleagues. We've learned so much. We've had the best schools, the best healthcare, the best neighbors, the best communities. Look at this room. We have just such diverse, smart, interesting people who are good humans. And we've been able to have these lives here in this state. So when I got this call and I had 24 hours to decide, I thought, I owe so much to this state and to this country. And if I have a chance to give back, shouldn't I try? Maybe I'll be bad at it, maybe she'll fire me, maybe I'll hate it, but shouldn't I at least try? And it has been a tremendous gift this last 2+ years. It truly has been a privilege and a gift in so many ways to work with people like Ashley and to work with all of you and Greg and Bob. But we are living in challenging times, as Dr. Burke showed. This is not a time to kind of just hang out and relax and go to some ribbon cuttings, go to a fancy banquet. This is not that time. This is kind of go time for the country, for the world, and especially for our state. So I told the governor, I promised her, every day that I'm in this job, I'm going to work my ass off. I'm going to do this job 1,000% because that's what the state deserves. That's what 7.1 million people and a $780 billion GDP deserves. And this is the time for our state. So I did. And I tried to do everything I could to help this state, and we did a lot of good things. We passed a $4 billion bill, the Mass Leads Act. We recruited a bunch of businesses. We launched a bunch of programs. We visited all of our communities. We tried to really make a difference, and hopefully we did. I only know how to do the job that way. Unfortunately, when you do the job that way, it doesn't leave a lot of other time for other things. And my mom is 80 years old, and she has been in the ER, and I have 2 grumpy teenage girls. And only Ashley and many others can do this job much better than me. Only I can deal with my mom and my kids. And so this was the right time, and I'm very proud of what we accomplished, but I'm very excited for all that's going to continue. Now, I just want to say a couple things, and I'm happy to take questions, and Ashley's happy to take questions. So Dr. Burke's presentation is very helpful. And in this job, I looked at the data a lot. I'm an economist by training. I'm a business person. And so when I was in business, every day I would wake up and I'd get a 4 a.m. email of yesterday's sales and all the key metrics, market share, margins, all that kind of thing. And in this job, I came in and I said, we need to have data. So we actually have all the data Dr. Burke showed, we look at all the time. The data is very sobering. It's not good. Let's not pretend, let's not try to gloss over it. It's not great. I have some comments on some things that I think that I would tweak on the data. I'll just give you 2 examples. And I think when we look at data, we have to be holistic in how we look at it. So I'll just tweak two small things. So overall, I think things are not great, but 2 small things I tweak. One is that we look a lot at cost in our state, and we are the most expensive in a lot of ways. And we have inflation in a lot of ways, and Dr. Burke showed where those categories are. I think we just need to make sure we take things in context. So we need to be more affordable. We need more housing. We need better childcare options. We need more supply. That is 100% true. This is not an excuse. But I just want to remind everybody, we are the most expensive in a lot of things. We're also the wealthiest state. We're the highest income per capita state. So and also we're the highest quality. So when you look at our costs, we are expensive. But you get way better education, you get way better healthcare, you get way better, everything, drinking water, air quality, whatever. You can go to other states that are cheaper. There are many states that are cheaper. you're not going to have good public schools. You're not going to have, safe streets. You're not going to be able to park your car in Boston and have to, and you're going to be worried about getting broken in. So there are some trade-offs here. And if you look at some of our costs as a percentage of income, so for example, let's look at healthcare. Healthcare as a percentage of average income in our state, we are in the lowest 1/3 of states when you look at how much you spend on healthcare as a percentage of your income, on average. And again, this is not an excuse that we should get more affordable, but I want to just take things in perspective. And the example I give to people is like, if you want cheap, if you just care about cheap, I just want cheap, 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 I just want like no taxes, I want like everything to be super cheap, you can move to other states. But I also don't think you want to drive a Yugo. Like, I don't think most of us drive a Yugo. We want something better. If you want something better, you kind of have to pay for it. So there is a balance here. So that's one thing I would tweak on that. The second thing I tweak is that I tracked our migration and demographics like maniacally, because you cannot grow the economy if you don't have people. And you especially cannot grow the economy if you don't have young people. So I tracked this data maniacally, and when I first came in the job in January of 23, one of the things that kept me up at night was we saw a dramatic change in population during the pandemic. So for a long time, decades, if you look historically, our state modestly grows population. Not a lot, but just kind of modestly. And the way we modestly grow population, we've always had people leaving our state domestically. People retire, they want something warmer, they want something cheaper, they move to their kids. We've always had domestic outmigration. That has been consistent. We always modestly grow because we have immigration from international, and that's how we've grown our population. And then there's births and deaths. What changed during the pandemic that was very worrying is our domestic outmigration more than doubled. And international immigration stopped during the pandemic. So during the pandemic, during those 4 years, our population shrunk dramatically, and also the domestic outmigration was not retirees, it was a lot of young people. That is a very concerning trend for the future of our state. Now, what gives me hope, though, is in the last 2 years, things have stabilized. We've now come back to normal. International immigration has returned, which is great for us. That is the lifeblood for our state. We love having the best and brightest in the world come here and become American by becoming Massachusetts residents, and that drives so much of our economy. So international immigration has returned, and domestic outmigration has actually gone back towards more historical levels. It's still not great, and we still have more young people leaving than we'd like, but it's kind of come back. So there's a little bit of good news in that. But in general, it's not good. So let's say, in general, the data is not good. You saw all the data. It's not good. You know what this data reminds me of? This data reminds me of what it feels like to be down 3-1 in a playoff series. It's not good. You don't want to be down 3-1 in a playoff series. You don't want to be down. But guess what? We're down 3-1. The series is not over. And also, when you're down 3-1, do you suddenly decide, oh, hey, you know what? We're going to become Knicks fans. Let's just move to New Hampshire. Let's just move to Texas. Let's move to Florida. It's cheaper there. Let's just move. Do we do that, people? No. Now, we may not win tonight. This season may be over for us. We may not win every game, every point, every series, every championship, but we are in this for the long haul. We've been around for 250 years. We've been around for the long haul. And you know what we do over the long haul? We put up more banners. Because we know how to fight, we know how to work, we know how to play this game, and when the times get tough, when you're down 3-1, that is when you want to be on Team Massachusetts. Look at this room. It's like a nice day outside. All of you could be doing something else. You're all here. You're all fighting every day in your businesses to do the right thing for your customers, for your employees, for your shareholders. You're all here working together as a community because you care about our state so much. You care about your region so much. That is what makes a winning team. And this is the time, right now, when things are not good, when you're down 3-1, this is the time for us to step up. This is the time for us to play better and to stay the course. When you're down 3-1 and you look at all this data, it is very easy to be like, you know what? Like, let's just give up. Like, oh, this data sucks. Like, every day is another executive order. It's so depressing. Let's go home and cry. Let's be resigned. Let's get angry. We can have all those feelings. But you know what you really need to do after you go through all those feelings is you need to say, okay, now, what is the game plan when you're down 3-1? How are we going to show up tonight, and how are we going to win? And if we don't win tonight, how are we going to win next season? How are we going to work all summer so we come back and win next season? That is what we should be doing. And we know how to do that. And we are doing that. So we are going to stay the course. We have a $4 billion economic development bill that is investing in the things that we know matter, that will outlast however long this president is president for. We are investing in how to cure disease, We're investing how to save people's lives. That's going to be around for a long time. People need to be cured of their diseases. We're investing in fighting climate change. We know the climate is getting warmer. The climate doesn't care if it's Republican or Democrat. The climate doesn't care if we're down 3-1. The climate is not good. And we are going to solve that through innovation and through all the great smart people we have here. We're trying to take care of each other with healthcare. We're trying to figure out how to, help on AI, on quantum, on robotics. We're investing in small businesses in all parts of our community. These are things that are our North Star that are going to matter. This is like practicing like free shots, like the free throws all day long. These things matter, and they're going to matter. So we're going to invest in those things, and we're going to stay nimble. So we're going to see how the Knicks show up tonight, and we're going to match them and outwit them, and we're going to play and do our best. That's what we do. So and I will just say, it's been such an honor, and I'm not going anywhere. I'm going to be around. I've promised the governor I'm happy to help however I can. I just can't do this full time. So I am not going to. This is my only time I'm going to say this, but but only as an analogy. I am definitely not Jason Tatum. I'm not that great, but we can still win without Jason Tatum because you got Jaylen Brown. You got Jaylen Brown right here. You don't need Jason Tatum. So let's go Team Massachusetts. Let's go Team Charles River. Let's go Celtics. You guys, this is go time for our country, for the world, for our state, for the Celtics. And I have tremendous confidence and faith in this team and in all of you. So thank you so much. We're so grateful.
Like I told, hello? Like I told you, she makes lemonade out of very, very sour lemons. Thank you, Secretary. Questions from anybody? Going to open the floor. I'll walk over here. So, and actually, I just want to say one more thing. I'm glad we don't have the Yugo dealers here in the chamber.
Yeah. Me too.
We appreciate that. But if you could introduce yourself and tell us your question.
Hi, thank you, guys. I don't know if this is working. Thank you. Mike Carroll. Grew up here in Newton, and I own Boston Ski and Tennis.
We're customers.
So we're in the retail business, and one of the things I think we need help with is how to compete with Amazon. So they don't have to pay all the rates of taxes and all the things that make it great here in Massachusetts. They really don't. And they have extremely deep pockets, so they can create supply chains that can deliver it to you in 2 hours. I cannot do that. You have to drive down our Newton streets that are full of businesses and traffic. I'm stumped, frankly, of how to really do something like that. We need help. So making it fair is one option. I don't know what else can be done, but that's everything else that you guys have said is totally true. We have great customers, we have great staff, all these things, but we're having trouble competing with that national capability. Thank you.
Okay. It is a challenge. So I will just say, so we sold, when I was at a startup called PillPack, it's an online pharmacy, and we sold our company to Amazon. It was a great outcome in many ways. I spent a lot of time in Seattle. Amazon is an incredible machine, and I think all of us probably have experienced how magical it is to order something and have it appear instantly. However, I'm going to admit this. I wasn't an Amazon Prime customer until they were going to buy us. Because and still today, I keep wanting to cancel it Prime, but our kids like the Prime Video. We never buy anything on Amazon if we can avoid it. Because I value so much having local stores. I don't want to live in a community where every single thing is a chain store and every single thing is a bank or like a cell phone store. I want to be able to have local bookstores and local shoe stores and local, shops selling like weird gifts. So I feel like if we want that, we all have to, we have to use our wallets the way that we believe that. So we actually are a customer of yours. And I also think that having worked at Amazon and been in Seattle a lot, they're very good at lots of things. There are also things that they're not good at. If you need someone, so we went to your store because my daughter bought her first set of skis. and she didn't know what kind of skis she wanted. She didn't know what kind of boots she wanted. She wanted to get fitted, and she wanted to understand like what kind of skier she was. You're not going to be able to do that on Amazon. And so I think there are ways that small businesses can compete, and there are ways that all of us should be supporting small businesses. And I'll let Ashley talk to it, Secretary Stolba talk to it, but in this administration, we've tried a lot. So in our state, small businesses are the majority of employers, and they're also the majority of employees. And so they're a very important backbone for our economy. We can't succeed as a state if small businesses don't succeed. Why don't you share some of the stuff we've been doing?
Yeah, I mean, one other thing I'll just mention is that one of the things that we can do in government is help promote. So one thing our scheduling team will probably kill us for, but we're happy to come to your business, take pictures, promote on our social media, and really get the word out. That's something that's small that we can do. But we also have someone in our office specifically dedicated to small businesses. So this is something that this administration felt strongly about. The governor appointed her very early on, and she's been out throughout the entire Commonwealth doing business hours and trying to really let businesses know what our resources are. So happy to connect with you after, but we'd love to come and celebrate all the work that you're doing.
And we also have Mass Growth Capital.
Yeah, so Mass Growth Capital is a quasi-public agency that we actually merged with Mass Development, not to get too in the weeds, but as part of the Mass Leads Act, we really wanted to increase efficiency of all the things that we did. And one of the things that we did is merge Mass Growth Capital, which historically was really targeted to support small businesses, with Mass Development, which is a quasi-public agency that some of you are probably familiar with, really to increase the ability to create capital for our small businesses.
Thank you, Mike, for the great question. And our chamber has, this year we introduced free chamber membership for all our independent retailers because we
Nice.
want to make sure our retailers are in the room and that we're hearing from them and interacting with them. So
That's great. That's good.
another question for anyone? Behind me. All right. Oh, okay. Daryl Settles, stand up, please.
Good morning. I'm Daryl Settles from Catalyst Ventures Development in Redgate. So, Secretary Hao, we're going to miss you. Everyone calls you the cheerleader of Massachusetts, but not only that, you're just like, you get everyone so excited and you really believe in what the Commonwealth is all about. So thank you for your service. No one has mentioned this morning in regards to what's happening with the federal government in terms of HUD and the cuts that are going to happen with affordable housing. I was with the developer yesterday, and he was sharing the fact that he was down in D.C. and that, the impact that's going to happen if they cut 40% of the money that goes to affordable housing for the recipients and cut Section 8, what is that going to do with our labor pool? There's just no way that those individuals who live in Massachusetts can stay in Massachusetts. So what are you thinking in terms of the impact and what can the government, what can we do as the Commonwealth in advance of this happening? Because it's going to happen. Whether it's going to be 40% or 30% or 20%, a cut is coming. And that's going to really, really damage our labor pool.
Yeah, I'm not an expert, I don't know, I think, are you an expert in HUD? But we were just in DC talking with all of our counterparts across states and also talking to people who are very familiar with the federal government. Things are not good, and things are going to get worse, I think. So it's very uncertain, it's very hard to predict, there's a lot of volatility. I think the one thing we know is that we don't know. But when we had a presentation from a woman who studies the federal budget. And I didn't know anything about state government before coming in this job, so now I know a little bit about state government. I actually didn't know a lot about the federal budgeting process. She walked through the federal budgeting process, and it was not good. So we have a administration, and then the same party controls the House and the Senate, and actually also the Supreme Court. And when you look at the budget levers that exist in the federal government, there are many different ways that you can change the federal budget, and including things like what's the word? Rescissions? Kind of rescissions, impounding parts of the budget, block grants. There's all these different things. And when you own all parts of the government, you can make a lot of these things happen. HUD will be impacted for sure, but so will Medicaid, healthcare, food stamps, education, support for the arts, NIH grants, FDA. This is going to be across the board. And we have not seen the beginning yet. This is just only the beginning. So things are not good, and it's only going to get worse, I think. And just to give a sense of the magnitude, I give speeches a lot, and in this job for a long time, I kind of kept saying, I was a CEO of a company in the 2008 Great Recession, the Great Financial Crisis, and that's probably going to be the worst recession of our time. So in 2008, we lost $7 trillion of stock market valuation in that Great Recession. In the last couple months, with all the tariffs and all the volatility and the executive orders, we've lost $9 trillion at its peak. And now it's come back a little bit, but it just shows you the magnitude of volatility we have right now. And when these cuts come, because they probably will come, because we have one party holding all parts of the government, it's going to ripple through not just our state, but many states. So now the question is, what do you do about it? I think, unfortunately, there's no amount of state money that can fill the gap. It's too big, and it's across too many areas at the same time. So I wish we could say that we are going to just fill that in the state. It's too big. The math is not going to work. However, our state is so much better governed than the vast majority of states. So we were sitting around, and all these states are talking about how they're already having huge budget shortfalls. They're already doing tons of cuts across the state. We are a well-governed state. We have a rainy day fund. We've had Republicans. We have Democrats. We're all reasonable, and we manage our state very well. So we have resources, including the $5 billion housing bond bill, including the Mass Leads Act, including everything else we do. So we can fill some of the gap here, and we are going to weather this much better than most states, and our institutions are stronger. They're going to hit our institutions like Harvard, like all of our schools, like our hospitals, but hospitals and universities are going to hit in every state, and we have the strongest. So again, it's going to hit us hard, but we're going to weather it better than everyone else. So the other thing is that I think this is the time where we have to rethink how we do things. And so we can say, which is true, I think, that all of these Trump actions are dumb. I think they are dumb. They're destroying the fabric of what makes our country great. I would not do that. If you're in business, if you were Nike and you're the world dominant leader in shoes, you wouldn't come into your company as a new CEO and say, you know what? Let's just get rid of shoes. Let's just eviscerate all our R&D and all of our sales for shoes. Who does that? Why would you do that? That's what we're doing. We're eviscerating our higher education system, our healthcare system, our R&D, all of the things that make this country strong and number one in the country, in the world for so many things. We're eviscerating those. So those are dumb. We all agree that. I've done that probably. But the issue is that this president won the popular vote and the electoral vote. And the reason he won is because he identified problems, and the problems are real. The solutions that are happening now, I think, are very damaging. There's a lot of uncertainty. It's going to cause a lot of pain for everybody. But the problems are real. The problems are people feel like government doesn't work well enough for them. People feel like they've been left behind. People feel like there's too much income inequality. Those are true everywhere, including in our state. So this is the time for us to say, okay, well, there is a problem here. We have a crisis. How do we use that to our advantage? How do we be more creative, be more nimble? How do we work together? How do we rethink how we do things? And we're going to have to do that across the board, not just in HUD. And we're going to have to do that in the coming weeks and months. This is the time to do that. So,
Anybody else? We have time for two more. We'll do this, and we'll go to Angela.
Hi, Krista Haggerty, Dependable Cleaners. So COVID had a lot of impacts on our economy, but one of the ones that I'm still seeing with my employees and myself is the impact of post-viral illness. There's been an increase regarding long COVID, autoimmune, and now we're seeing an increase in cancers. And I see it in all of my 150 employees as well as their families. And I'm wondering, has that economic impact been measured? And is it something that the state is concerned with?
I'm not familiar with any studies that we're doing to track that, but I'm not sure if you have either. But that is very interesting to know, and we will definitely look into that.
Thank you.
Thank you.
I actually wanted to ask a question related to what you just said, Secretary, about the various things that are unfunded. So the Economic Development Bill has several pillars, including supporting life sciences, which is very important in our communities, and AI, but there also is the clean tech part of that. And we know that federally, we've decimated every program that might be standing up for environment. How does that fit with what we can try to do in the state when it's the insurmountable, when we're ruining the environment in so many ways, but we're trying to invest in clean tech?
I'm so happy that you raised that. So for the first time ever, this administration included in our economic development bill climate tech. We understand that the only way out of getting out of this climate crisis is through technology that we are creating here in Massachusetts. So the reason why I'm running out of here right after this is because I'm actually going to a climate tech conference that's happening at MGM Fenway. I was there last night for the opening reception. There were hundreds of business of people, investors, some municipal leaders. You should all go. Come with me if you'd like. It's going to be a really great day. Yvonne's speaking later in the day, and the governor's speaking at 10:15. But we still are very much committed to having climate tech be a leader, for us to be a leader in climate tech here in Massachusetts. So we're still going strong. We're implementing the $1 billion that we've dedicated to climate tech. We're implementing those programs now through the Mass Clean Energy Center. We're building off the programs that we had in Mass Life Sciences. One thing I'll say is we are looking at the programs that we had in Mass Life Sciences to support our life sciences industry, seeing how we can make these programs better. So one of the key things that we're looking at climate tech is that we want to be sure that these programs are supporting businesses all across the Commonwealth, including labor and workers from all across the Commonwealth really being equal. But we are 100% committed to climate tech and continuing and starting to be the leader here in Massachusetts.
Okay. Good morning. So I'm Angela Pitter, the board chair here, but I'm also a business owner, Livewire Collaborative, AI and digital marketing consultancy. I was there at the Imagination Action event where you kind of brought the house down and then at 10 o'clock and then 3 p.m. I'm like, oh my God, she's stepping down. What's happening here? So, but my question is, AI is a tool in the toolbox, and then how is the state, we need to be lean these days and be smarter, not harder. How are you helping businesses like the ones in this room to both reskill and upskill their employees so that we can actually do that, do more with less?
You did this. You're so proud of this.
So when we did our economic development plan, we went around the state, and AI came up in every conversation. And we said, oh, this is not a fad. We're in the very early days. It's like the internet in 1995. I'm old enough. I remember when this thing called the internet appeared. That's where we are with AI. So the governor created a statewide AI task force, which I co-chaired along with Secretary Snyder and IT. And then we published, we had an amazing group of academics and legislators, folks from labor, startups, venture capital people that were part of this task force. We published the report in December of 24, so just the end of last year. If you're bored, you can go read the report, but it lays out our recommendation. And essentially, the recommendation is we should lead in AI. So many states and many countries are afraid of AI. And there are reasons to be afraid. And they're saying, let's regulate it, let's pretend it doesn't exist, let's stick it under a rug, let's make sure we protect ourselves against it. It's here. The toothpaste is out of the tube. We got to figure out how to brush our teeth the best way possible with this and not get any cavities. And so there's no kind of ignoring it or trying to push it away. So we should embrace it. And if we embrace it and we lead in the right ways, AI has so much positive potential. So the recommendation is that we want to lead in AI and applying it to solve real problems to make people's lives better. And the three big parts of the recommendation, number one is we're going to lead with values and equity. So we want to make sure we lead in good ways where we're protecting people and we're doing it where everyone can benefit. So that's bucket one. The second thing is we want to lead and help our whole ecosystem, all of our companies, all of our talent here, by investing in infrastructure. So we're going to invest in chips out in Holyoke, so we have compute power. So you don't have to be the wealthiest giant tech company to access, compute power to run LLMs or algorithms or models. We're going to make that available to everybody in our state, and we're going to try to create data. So anonymized, safe, protective, holistic data that's not biased, and we're going to make those available to people. So that's number two, is infrastructure. And number three is really investing in the innovation and startup ecosystem. Just like we did in life sciences, how do we make sure we do the workforce training? How do we make sure we give out research grants? How do we make sure we convene people and have hackathons? And so that's all happening as well. So we just announced last week, I think, we've hired the new director for the State AI Hubs. She's awesome, Sabrina. We just announced the chips are going in, and we announced a partnership with IBM Red Hat on a startup incubator in Seaport. So there are a lot more, and there's a bunch of grant programs already out. So I'd encourage you all to go to the State AI Hub website to look and see what's happening. But the goal here is to have everybody benefit and to lead with this new technology.
Thank you both very much. Really grateful for it. I know they need to leave, so thank you so much for everything, and everyone here for being here, to Eastern Bank and to all our other sponsors, to the hotel, and really to all of you for being part of this chamber and this community. Thank you. Have a great morning.